Time now for an in-depth look at the market news this afternoon, and for that I'm joined on the line by Dr. Kim Sei-wan, professor of economics at Ewha Womans University. Professor Kim, good afternoon. Hope you had a nice Lunar New Year break. Good to have you back on.
Good afternoon, Devin.
Well, it's been a while, Professor. Of course, coming off a 5-day holiday in Korea, we see the U.S. stocks rising this week, thanks in large part to a big jump in earnings at Google, which has also announced a stock split of 20-1. Some of the shock wearing off, though, when it comes to monetary tightening in the U.S. That's also helping stocks rise. Help us get up to speed with the global markets.
U.S. stocks rose Wednesday, extending their winning streak as a strong earnings report from Google parent Alphabet outweighed weak economic reports from U.S. labor market. All major indexes rose for a 4th straight session. The Dow Jones Industrial Average climbed 0.6%, and the Nasdaq Composite gained 0.5% on Wednesday. The Nasdaq, the tech-heavy index, rose more than 1% only in the session, supported by Alphabet's surge in profit, but struggled to maintain that early strength. Shares of Alphabet rose 7.5%. To $2,960 per share after profit rose by a third in the latest quarter. Alphabet also unveiled plans for a 20-for-1 stock split. But against Economies' previous expectation, the non-farm private sector in the U.S. lost about 301,000 jobs in January.
Yeah, real contrast, a lot to take in right now in the markets. Of course, here in Korea, we had a big gain today coming off the long holiday. Investors seeing the bounce back on Wall Street. So today, both of Korea's main indices up pretty significantly. A lot of the companies gaining today have to do with the pandemic now that coronavirus cases are at a new high. Tell us about the domestic market.
It looks that domestic stock markets are still dominated by serious fears on markets structural downward adjustment from both of higher interest rates and global production disruption. But after a long Lunar New Year holiday, domestic market has started with a robust rise today. The two main factors of today's rise are U.S. market advancement yesterday and possible delay of the interest rate hike by U.S. Fed from weaker U.S. labor market data. The benchmark of KOSPI gained 1.7%, and Kosdaq also gained 2.2% today. Most of large cap stocks traded higher today, but Kia Motors, KB Financial Holdings, and Hyundai Mobis have retreated today. In KOSPI market, individual investors net sold stocks, but foreign investors and institutional investors together net bought stocks today.
Well, zooming out a bit, Professor, the members of OPEC and its allies in OPEC Plus have agreed to keep raising oil production, going up by another 400,000 barrels a day in March. Oil prices are at their highest in about 7 years. Brent crude for April is above $90. What's behind the rise in oil prices, and what do you see happening on that front?
There are lots of diplomatic issues in international oil market today. OPEC plus oil production lift by 400,000 barrels per day is not enough for recovering global economy. Also, geopolitical risk of Russia-Ukraine conflict as another factor of higher oil price. The OPEC and a coalition of Russia-led oil producers said they agreed to raise a collective production of another 400,000 barrels a day in March. Oil prices have surged in recent months to the highest levels in about 7 years, fueling inflation around the world, in part because several OPEC Plus members have been unable to meet their share of production as global demand has picked up. Yesterday in London, Brent crude, the international benchmark, was up 1.1% at $90.16 a barrel. Meanwhile, the Biden administration has pleaded for months with Saudi Arabia and other OPEC countries to open the tap wider to tame fast-rising U.S. gas prices that have become a political liability of the Biden's government. Yet members with spare capacity, like Saudi Arabia, are reluctant to increase output faster.
Yeah, it's an issue in the U.S. It's an issue here, too. Korea continues to see strong exports. Data in January showing a rise of 15%. But because of high oil prices, the cost of imports was up even more. So for the first time in 14 years, Korea had a trade deficit for a second month in a row. It is winter, which means a greater need for fuel. How much of a concern is this, and do you see it continuing?
You're right, Devin. The 2 months trade deficit in Korean economy is highly related to skyrocketing international crude oil prices. Despite the spread of Omicron and rising raw material prices, Korea reported record high exports for January. But also, Korea scored a second consecutive monthly trade deficit due to soaring energy costs. According to Korean government, January exports were 55.3 billion US dollars, 15.2% higher than a year earlier and a record for January. It was actually the first time export in January surpassed $50 billion. But at the same time, Korea recorded imports of 60.2 billion US dollars, 35.5% higher on year and the highest for any January in history. Januaries and Februaries are typically report lower export than other months as they can include the lunar calendar New Year holiday, resulting in a fewer working days. As a result, January saw two straight months trade deficits, 4.9 billion trade deficit in January and 452 million US dollars trade deficit in December last year, respectively. The Korean economy's trade situation will be therefore depending on international oil price changes, which is skyrocketing over 10% over a month.
Yeah, and there's talk of those prices even getting to $100 a barrel. But finally, Professor, the familiar issue of Korea's aging society. The government says in a new report that the productive working age population is going to shrink dramatically by the end of this decade. That's defined as people aged 15 to 64. Their numbers will decline by more than 3 million, it says. People are living longer, too, of course. Tell us about these projections and what you make of them.
The largest risk in the future of Korean economies are not COVID, export, employment, and economic growth. It is so rapidly aging population, which is the fastest among OECD member countries. According to recent reports from Korean government, it is predicted to see its working age population shrink by a whopping 3.2 million during the 2020 to 30 period amid the country's graying demographics. All these demographic situations are related to seriousness of country's low birth rate and fast aging population, of course. On the back of such a demographic change, the economically active population, as defined by people aged 15 and over and able and willing to take a job, is predicted to start a downward turn after reaching its peak in 2025. The report predicted during the 2020 to 30 period overall, the country may see an addition of only 746,000 people in the economically active population, a steep fall from 3.1 million during 2010 to 20 period.
And that, of course, has a whole lot of implications all across society. But, Professor, we'll have to leave it there for today. Thank you, as always, for sharing your insights with us. We appreciate it.
Thank you very much, Devin.